Yo, 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 what's up, Banter family? Welcome to yet another masterclass. What is masterclass? Guys, we've decided to make a great educational playlist on our channel. You know, we have the two shows. We have the early show with myself, and then we have the later show with Random Man with the fundamentals. And you know what we sort of decided was it's time to have the smartest audience out there. We need to make sure that you guys understand what we are saying every day. And the whole purpose of the masterclasses is instead of cramming everything down into one or into a couple hours of knowledge, we're actually going to do videos on section for section of things that we cover through the show to make sure that you understand, as well as giving you a database that you can always fall back on. Go have a look at anytime you're stuck and you understand that what we are saying, because there's no point us giving all of this information every day, which we give a lot of, and you don't understand half of it. So we just wanted to set you a bit of a foundation, something to always fall back on. Know that we always got your back, and know that we are here to educate you guys. We are here to teach you how to fish, as well as making money on the journey. The biggest gift that I would love to give you guys is all the knowledge that I have in this market, so that you can always make a decision and that you are always protected. You understand what to do when you see specific things. Before I do start, hit that like, hit that subscribe button. Follow us on Twitter, follow myself on Twitter, follow Rand on Twitter, follow the channel on Twitter, follow us on Instagram as well. Make sure you're following our two YouTube channels, the main one which we are on now, and then also the microdose one. And that is for any updates in the market. If anything big happens in the market, we have somewhere to reach you guys, as well as if anything happens to the main channel, we do have a second channel for you guys to fall back on. Let's get going, guys. What is this main one about? This masterclass today? It is the Golden Cross. What is the Golden Cross? Reason being why I am doing this now is because it's recently happened. It can happen again in your careers, and you need to always understand what is the Golden Cross and what does the Golden Cross actually mean. So if I load up on my chart over here, the first thing that I want you guys to do is, how do you get the Golden Cross? What is it? I'm not going to go into technical terms of what it actually is, but it's basically by using two moving averages, and we want to see a specific cross in the line. So the first thing we do is, I am using CoinPanel, guys. Remember, I do have the charting feature where you are able to see my live charts all the time, meaning that if I draw a line or I draw anything, you are able to go look at Sheldon's charts, the sniper's charts, and you can go see what have I been charting, especially on the shows when I'm prepping for the shows. It helps you very much. The description is below if you want to join. Let's have a look. So the first thing, this works very similar to TradingView, where you want to have a look at the top. You want to go look at indicators, and you need to load two indicators. What it is we're looking for is a moving average. Now, what you want to do is when you click MA and you get the moving average, we want to load two of these. Okay, now the first one, you can see when you load them, it's already automated to set at MA9. We want to go to the settings and we want to change that. The first one, you go to inputs, you go to length. We need two moving averages. One is the 50 moving average. So you'll type in 50, you'll go to style. We usually use the 50 in the red. Let's click that there, and I usually make the line a little bit thicker so it's easier to see. Then the second one that I need is the 200 moving average. So I will go to length, I'll erase what's there, I'll put the 200 in. I usually use a light blue. Also go to the second thickness. There we go, and we can see these two bad boys crossing over there right now, and that's something called a golden cross. Now, what we're looking at for a golden cross is when we have the 50-day moving average cross up to the 200-day moving average. You can see over there. Now, it's not to say you need to be a scientist on why this is happening, because what does it mean and what has it done in the past as well? This is just a good long-term indicator. It's not going to tell you where to buy right now. It's not going to give you entry points on what's the right entry points. That's where the trend lines and a lot of the other things come into play, which we will be having lots of masterclasses on. This is just the indication that where are we in the cycle right now? Because remember, there are three stages in the cycle. There's a bear part of the cycle, meaning it can take, which we recently went through at this stage over here. Then you get the sideward stage in the market, where it's usually an accumulating market, where we have a range, where the difference is in a bear cycle, you get gains at different times. but it doesn't last too long, and then the markets come down, and then you get some sort of gains. So it means it's not really an active trading area that we are in. There are trades to be made, but you need to know that when we're in a bear cycle, you can lose those gains very quickly. And then when we're obviously in the accumulating cycle, which is the sideward cycle, the difference over here is it gets more boring. It goes very sideways. But in this stage, your range has shortened, but there is still trades to be made. The difference is instead of a 50% trade, we will be getting 10% moves up, down, up, down. So it just means that the gains to the movement in the market will be a lot less, which means you need to sort of understand that we are trading that you can't be aiming for 50% trades when we're in a 10% trade sort of market. So it's very good to understand the difference. And then we obviously get the bull cycle where the ranges get a lot bigger. We get 50, 100% pumps out of the markets. And then also 30% dumps in the markets. So we get big pushes up. As a little example, Bitcoin in the last month has gone up 80%. And then all of a sudden we get a red candle, which is, let's have a look there, 20%. So 80% gain, 20% move. Now, if we go look quickly at the accumulating side, we would get a 30% pump from Bitcoin, and then we would get a 28% dump from Bitcoin. So you can see how the ranges change. Now, points and main understanding of the moving, the golden cross is, like I said, it's not going to give you the entry, but it gives you a segment on what part of the market am I in. I know there's 3 parts of the market. And what usually indicates to a golden cross is we are going into very strong bull territory of the market, which means your ranges get bigger now. Now, the little thing by knowing that is, because at least it gives you a foundation on where are you entering this market. If you're a brand new trader or you're someone that just comes in, at least this gives you an indication of, I know there's 3 stages in the market. Which one am I in? And when we usually get the golden cross, we are entering the very strong bull stage, which means you are entering the stage where the market moves really quick to the upward side. It has big dumps in between. And you can see it's a very much bigger range in the market. Now, the last time we had a golden cross, like I said, we want to be seeing the 50, the red one, cross the blue one. The last time we had the cross, Bitcoin was $10,000. Let's actually have a look here. Yeah, it was just over $9,000 to $10,000. Bitcoin then rallied from there to $64,000. Now, this indicator has only happened 5 times. This is the 5th time in the last 6 years. So it's not something that happens often. So this is a very larger time frame, but at least it gives you a foundation on where are you in the market. And the main thing is, with indicators, they're all going to give you a sort of clue of what's to happen, but there's always a job to happen after that. And you need to know what's the good points of it and what are my warning sign points of it too. So I'm going to show you quickly the last 2 or 3 golden cross things and how to be trading it and how to actually understand it. So the last cross we had, we broke through. And when we broke through, you could see that we always stayed above this blue line, right? Which is the 200-day moving average. Now, that's already, having a look at all of them, as long as we get the cross and we stay above 200-day moving average, do you see how we get massive moves in the market? There was the first. Let's see if I can catch the one before that. Okay, cool. I see this one does not have data previously, but there was a previous cross in this region over here, which then started the previous run over there. But when we break through and we get the cross and we stay above 200-day moving average, do you see how all of a sudden we get a big acceleration in the market? From here, since we had that cross, Bitcoin pumped 207%. Okay. Then we had the downwards form. We had another cross in this section over here. But this section over here, we didn't hold the 200-day moving average. So it's very important to understand that, yes, it's a good long-term view, but we need to always hold a certain level going forward once it's basically happened. So this one over here was the one that went wrong out of the 5 over the last 6 years. Okay. And reason being is we had a big COVID incident. We had the whole stock markets crash. It didn't hold anymore, and we basically fell. So at least we know now, if I get a golden cross or I get the 50 cross in the 200, we need to hold the 200-day moving average after that for it to continue to play out. Because if history repeats, every time we've gotten this golden cross and we have held it and we have held the 200-day moving average, we have gotten insane gains. Now, the first time was a 200% pump from Bitcoin. Second time, this crossover here, let's have a look percentage-wise. Bitcoin then did 600% after. So the fact that it's only happened 5 times in the last 6 years, 4 out of 5 have been really, it's been the start to the actual biggest bull cycles we've ever had, is a really good indication. And you can see this is where we are currently fighting right now. So the golden cross is a bullish indicator. It's saying that we can enter a run. You know, there was the cross, right? Now, what happens if this was the cross and we just entered this thing? We could see $100,000 Bitcoin. Now, remember, it doesn't matter what the price is and the date is that I'm doing this video right now. At any different time, Bitcoin can go up here, can go to 100. These MAs can start flying up, start moving. And then at some point, we get the cross of death. And then again, it starts again, and we start getting the cross of the MAs again. These are going to happen as long as you understand that what does it actually mean? And they're very strong bullish indicators. So what we want to see, here we go. I've just gotten a golden cross now. Okay. Now we can start to see acceleration, excitement starting to come back for the market. But there is my blue line. Let me just remove the red one. Now I've gotten the golden cross. I want to hold that line. History repeats, and I keep holding that line. We are on the next bull cycle, and this can take us to a very much higher sort of levels. So you're going to be using, there are many different moving averages out there. Remember the time frames, guys. This is a key indicator on the daily charts. What is the daily charts? It's a view of a larger time frame of the coin and price action on the coin. The different time frames we have here works on different times that you want to be trading. So meaning that if I'm looking to trade for this week, I don't need to look at very high time frames. I need to look at data that's going to show me for the next week, is it a good time to trade? Meaning that if I go to a 4-hour chart, each candle is 4 hours, which means if I'm buying a break of a trend or I'm buying a cross of the MAs or something like that, you know, whatever data I'm using, it's for the next week, meaning that I want to trade once or twice a week. That is the sort of time frame that's going to give me that data. Now I want to trade once a day. I'll jump to the 1 hour. Or I want to trade once a month. I will jump to the 8 hour or the 12 hour. Or I want to trade once every 6 months, once every year. And that's where the daily and the weekly ones come in. And for this indicator alone, the main one is the daily that we are using. And this is just a good indication. I've just come into crypto, or I've just started investing now. Where am I in the cycle? Oh, I'm on a golden cross. I'm at the point where this market could turn really bullish quick. Now you know in your head, okay, if this market turns bullish really fast, I know the ranges are going to be big, which means that because the ranges are getting big, I need to be careful on not chasing the pump. I need to be buying the big dips, because now I know this market's hit a point where we really start extending the range, which means if I get caught at any time by buying at the wrong point, you know, I can look at easily very quick, let's measure here, 10, 20, 30, 40% drops at any point, which means that if I miss the entries that I want, or the sort of thing, I know big dips come at any point in the market. We could see after the last run over here, push up, push down, push up, push down. Now that might not look like a lot, but if we look percentage-wise, that's a 32% drop in Bitcoin, which means if I get caught buying the pump, or I get caught buying at the wrong point, I mustn't be surprised to see 40% of my money gone at any single point, which means that you need to be not calculating, but you need to be strategizing that you always have funds for those 40% drops. Because look what happens when you buy the 40% drop. Do you see the gains that come up afterwards? So now you can identify, I got a golden cross. You can identify where am I in the market, and now you can understand what you can sort of expect from the market. Firstly, you need to keep holding the 200-day moving average. Secondly, if history repeats, we're about to enter a very big range sort of market cycle where we're in the market right now, which means if I've missed the pump, I'm going to be patient and I'm going to wait for the big dip, and I want to be catching the dips, because I know if I can get 40% off, I know where the next pump can take us. So you need to be very careful on chasing FOMO and controlling that emotion on where you're buying. And at least we have this indicator. It's not going to tell you where to buy. It's not going to give you anything of those. It's just going to explain to you what part of the market are you in. And then you can understand the ranges are bigger now. I need to be very careful with FOMOing in, because if I buy at the wrong time, I can go into a loss. It can take me quite a bit of time to recover again. You need to get to the point where I've missed the buy right now, but I know there's a good dip coming. And when that dip comes, that's where I'm going to be buying. Remember, buy the red, sell the green. So guys, it's just a nice little indicator for yourself. Remember, load your 2 moving averages. One is a 200, one is a 50. This is not going to help you with where to buy in the market, but at least it's going to give you a good indication on where are you in the market. And then you can start working with the strategy and see how you're going to trade the actual market. So let's get this off here. So guys, have a great one. Make sure you have hit that like, hit that subscribe button. Stay tuned. There's a lot more awesome masterclasses coming. I'm going all out. I'm going to be sharing every single thing I know about crypto. I'll see you all shortly.